If you are looking to save rupees 1.5 lakhs tax under section 80C and also create a wealth of 3.3 crores to 10.96 crores, then this video is for you. I am Nilesh Bodhi. You are watching CoachFin, and let's see how we can save tax and also create wealth by investing in ELSS funds. So we are going to see 4 funds, that is Mirae Asset Tax Saver Fund, Kotak Tax Saver Fund, Axis Long Term Equity Fund and Canara Robeco Tax Saver Fund. Okay, the category of this fund is equity ELSS funds. If you see the fund age of Mirae Asset Tax Saver Fund, it is 6 years and 7 months. For Kotak Tax Saver Fund, Axis Long Term Equity Fund and Canara Robeco Tax Saver Fund, the fund age is 9 years and 6 months. Now the AUM for Mirae Asset Tax Saver Fund is 11,495 crores. For Kotak it is 2,529 crores. For Axis it is 27,628 crores, and for Canara Robeco Tax Saver Fund it is 3,518 crores. As per riskometer, these are very high risk category funds. Now if you see the minimum asset for SIP and lump sum, so the minimum amount for SIP in all these 4 funds is rupees 500 per month, and the one time lump sum is just rupees 500. Let us now see the fund details for all of these funds. The expense ratio for Mirae Asset Tax Saver Fund is 0.57%. For Kotak Tax Saver it is 0.75%. For Axis Long Term Equity Fund it is 0.8%, and for Canara Robeco Tax Saver Fund it is 0.66%. There is no exit load in all of these funds, but you will have to remember one important parameter, and that particular parameter is that the lock-in period. So the lock-in period for all of these ELSS funds is 3 years. You can't withdraw your money for 3 years from this fund. Post 3 years, you can withdraw anytime. The benchmark for Mirae Asset Tax Saver Fund, Kotak Tax Saver Fund and Axis Long Term Equity Fund is Nifty 500 TRI, and for Canara Robeco Tax Saver Fund it is S&P BSE 500 TRI. If you see the investment horizon, then these funds are good for medium term. But since we have a working class in India, I'll suggest you please keep on investing in these particular funds till the time of your retirement. There are 2 benefits. First, as we know, 80C benefits, that is tax saving. Second, in the long term, you will be having a very good investment corpus. So you will generate a very good wealth during the time of retirement. So don't touch this fund till that time. Keep on investing and make sure you are also increasing your SIP per year basically. Okay. If you see Mirae Asset Tax Saver Fund, it is managed by Nilesh Surana since 20th November 2015. Kotak Tax Saver Fund is managed by Harsha Upadhyaya since 25th August 2015. Axis Long Term Equity Fund is managed by Jinesh Gopani since 1st January 2013, and Canara Robeco Tax Saver Fund is managed by Sridatta Bhandwaldar since 1st of October 2019. Now let us see the fund returns. Okay, so 1.99% is the returns given by Mirae Tax Saver Fund in 1 year period. For 3 years it is giving 19.28%. For 5 years it has given 15.5%, and since inception it is giving 19.28%. Kotak Tax Saver Fund has given 3.89% in 1 year, 16.87% in 3 years, 12.47% in 5 years, and since inception it has been giving 14.86%. Axis Equity Long Term Fund has given minus 7.69% in 1 year, 12.10% in 3 years, 11.65% in 5 years, and since inception it is giving 17.25%. Canara Robeco Tax Saver Fund is giving 2.22% in 1 year, 19.77% in 3 years, 15.40% in 5 years, and since inception it is giving 15.20%. If we see the portfolio allocations, then Mirae Asset Tax Saver Fund is holding 68 stocks in its portfolio. If you see the allocation by market cap, it is investing 58.49% in large caps, 11.52% in mid cap, and 7.1% in small cap. If you see the allocation by sector, it is investing 30.65% in financial sector, 12.53% in technology sector, and 10.4% in energy sector. If you see the top stock holding, it is investing 7.85% in HDFC Bank Limited, 6.52% in Infosys, 6.47% in ICICI, and 6.15% in Reliance Industries Limited. Now, Kotak Tax Saver Fund is holding 57 stocks in its portfolio. It is investing 58.07% in large cap, 21.25% in mid cap, and 12.82% in small cap. It is investing 24.13% in financial sector, 8.85% in technology sector, and 8.19% in capital goods sector. If we see the top stock holding, it is investing 7.27% in ICICI Bank, 5.34% in State Bank, 5.13% in Reliance Industries, and 4.62% in Infosys Limited. Now, Axis Long-Term Equity Fund is holding 41 stock in its portfolio. It is investing 63.92% in large cap, 17.35% in mid cap, and 3.63% in small cap. If you see the allocation by sector, it is investing 32.33% in financial sector, 15.27% in services sector, and 10.91% in technology sector. If we see the top stock holding, it is investing 8.62% in Bajaj Finance, 8.49% in Avenue Supermarts, that is DMart, and 7.75% in TCS Limited, and 6.64% in Kotak Mahindra Bank Limited. Now, if you see the Canara Robeco Tax Saver Fund, it is holding 53 stocks in its portfolio. It is investing 60.98% in large cap, 16.15% in mid cap, and 5.35% in small cap. It is investing 27.54% in financial sector, 11% in technology, and 8.37% in energy. And if we see the top stock holding, then it is investing 7.39% in ICICI Bank Limited, 7% in Reliance Industries Limited, 6.95% in Infosys Limited, and 6.68% in SDFC Bank Limited. Let us now see the most important parameters, that is the risk measures. Okay, so the first parameter is standard deviation. Standard deviation gives an idea about how volatile the fund returns has been in the past 3 years. Lower value means it indicates basically, the lower value indicates more predictable performance. Higher the standard deviation, higher is the volatility of the fund. So now, as we can see here, in case of Mirae Asset Tax Saver, the standard deviation is highly volatile. Okay. The second parameter is beta. Beta gives an idea about how volatile fund performance has been compared to similar funds in the market. Lower beta implies the fund gives more predictable performance compared to similar funds in the market. A beta greater than 1 indicates that the stock price is more volatile than the overall market. A beta less than 1 indicates that the stock price is less volatile than the overall market. And a beta of 1 indicates that the stock price moves identical to the overall market. Now, as we can see here, it is highly volatile. Okay. So the third parameter is Sharpe ratio. Sharpe ratio indicates how much risk was taken to generate the returns for the fund. Higher the value means fund has been able to generate better returns for the amount of risk taken. Higher the Sharpe ratio, better is the fund. So as we can see here, Mirae Asset Tax Saver Fund, it is having a better Sharpe ratio, means higher Sharpe ratio. So it is giving better risk adjusted returns. And the last parameter is alpha. Okay, alpha indicates how the fund has generated additional returns compared to the benchmark. Okay, which is nothing but the index. And in this case of Mirae Asset Tax Saver Fund, we can see alpha is also having better risk adjusted return because it is able to generate additional returns when compared with the benchmark. Now, if you see Kotak Tax Saver Fund, standard deviation is good. That is, it is low volatile, as we are really wanting the funds to have standard deviation as low. In case of beta, it is highly volatile. When it comes to Sharpe ratio, it is poor risk adjusted, and in case of alpha also, it is poor risk adjusted returns. In case of Axis Long Term, standard deviation is highly volatile, beta is high volatile, Sharpe is poor risk adjusted, and alpha also poor risk adjusted return. So in Axis Long Term Equity Fund, all the 4 parameters are not good. In case of Canara Robeco, standard deviation is low, beta is high, Sharpe ratio is giving better risk adjusted return, and alpha is giving poor risk adjusted return. So these are the risk measures via which we can we will be able to select a fund seeing its performance, and these parameters help us basically in evaluating the funds. Okay. Now let us see the downside protection for this particular funds. It is better to choose funds that beat the benchmark by protecting gains during market falls. If we consider downside protection independently, it is more common than a coin toss to see an active fund fall less than the index. Okay, what does that mean? It means that when the market is down, like as we see right now, we are in a very volatile situation in the market. The market sometimes goes very up, then it comes down, again goes up, again goes down. So it is very volatile situation. So when the market is going down, what is the percentage your fund is giving in when we are comparing it with the market? So if your fund is falling more when compared with the market, that means you have less downside protection, means there is no downside protection. But if your fund is falling less, compared with the market. That means it has got good downside protection. Okay, let us now see. So as we can see in the 3-month period where the market is minus 5.42%, there is only one fund, that is Canara Robeco Tax Saver Fund, which is giving minus 3.25%. That means it is having good downside protection in a 3-month period. If you see the 6-month period where the market is falling minus 10.10, the only fund which is falling less compared with that is Kotak Tax Saver Fund, which is minus 8.92%. In YTD, that is year to date, we see where the market is falling minus 6.84%. There is only one fund again, which is Kotak Tax Saver Fund, which is giving good downside protection, and it is falling only minus 4.48% compared with the market. And in the 1 year period where all the funds are performing good or positive, where the market is 1.70%, Axis long-term equity is falling minus 8.45%. It means if you are investing in Axis long-term equity fund, it will not be giving us good long-term protection in first year. So if the market goes down for a year, then we can expect that this fund will also go down more compared with the market. So I hope downside protection is clear to you, all of you now. Okay, there is one more thing which you have to keep in mind when you are investing in ELSS, that is ELSS funds have a lock-in period of 3 years. Means if you invest your money in ELSS fund, you can't withdraw your money till the period of 3 years. After 3 years, you can withdraw, but there is a lock-in period of 3 years. Just remember that. Let us now see the very important parameter, that is the benchmark comparison. Okay, this is the most important parameter which I look when I select any fund. Okay, so if you see Mirae Asset Tax Saver Fund, then this fund since its inception, it has been beating the benchmark over a period of time. As we can see, since mid of 2016 till 2022, it is continuously beating the benchmark. It has outperformed, and hence this is a very good fund for me if I want to invest in this. I'll see this particular parameter. Now, if you see Kotak Tax Saver Fund, it is also good. But if you see when it started, it was not beating the benchmark from 2013 till 2015, mid of 2015 basically, it was not beating. Then it started beating, but in 2016 it came very parallel with the market, and that is the index basically. And from 2016 till again 2019 it was going good, but there is a little bit of period, maybe 2 or 3 months or a quarter basically, where it was going exactly in line with the market. Then again afterwards it is picking up, but it is still beating the benchmark in 2022. If you can see from 2020 till 2022, it is really beating the benchmark. So yes, it is also again a good parameter because this fund is beating the benchmark. So Axis long-term firm, just like Mirae Asset Firm, it is also beating the benchmark since its inception. As we can see, it is very clear. When it comes to Canara Robeco Equity Tax Saver Fund, as we can see, it has started beating the benchmark since 2020. Before that, it was going in parallel with the index itself. So I hope this is very clear. A benchmark comparison is the most important parameter when we are trying to invest in the market or any fund basically, right? Because that will tell you exactly how this fund will perform. See, there is no guarantee that this fund will carry the same performance over a period of time, but then it helps us why this particular fund would perform, right? I hope this is clear to you. Okay, let's move ahead. So let us now consider that we are investing 6,000 per month in all these funds, and what will be the returns if we do that? So Mirae Asset Tax Saver Fund is giving 19% returns, and it is outperform the market, right? So it is beating its benchmark. So let us consider or assume that these funds will be continuing to give 19% return in the next 30 years. So in 10 years, we will be generating a corpus of 21,50,745. For 20 years, we will be making a corpus of 1,63,17,944, and in 30 years, we will be generating 10,96,38,893. Kotak Tax Saver Fund is giving 14% returns. So in 10 years, we can make 15,72,548. In 20 years, our corpus would be 78,98,078. And in 30 years, it would be 3,33,42,334. For Axis Long-Term Equity Fund, it is giving a return of 17%. So in 10 years, our money would grow to 18,93,811. In 20 years, our corpus would be 1,21,37,500. And for 30 years, our corpus would grow to 6,75,45,983. If we see Canara Robeco Tax Saver Fund, it is going 15% returns. So in 10 years, we will be having 16,71,944. In 20 years, it would generate a corpus of 90,95,730. And for 30 years, it would generate a corpus of 4,20,58,924. Now this is based on the assumption that these fund is would be giving the returns which they have been giving till date. Okay. Let us now see the lump sum returns. Let's say you are investing 1,50,000 in all these funds. So what would be the return in 10, 20 and 30 years? So if we consider that Mirae Asset Tax Saver Fund is giving 19% for the next 30 years, then in the first 10 years, you will be able to generate a corpus of 8,54,202. In 20 years, it would be 48,64,414. In 30 years, it would be 2,77,01,297. For Kotak Tax Saver Fund, with a return of 14%, in 10 years it would be generating 5,56,083. In 20 years it would be 20,61,523, and in 30 years it would be 76,42,524. For Axis Long Term Equity Fund, in 10 years it would generate 7,21,024. In 20 years it would be generating 35,65,840. In 30 years it would be 1,66,59,698. And for Canara Robeco Tax Saver Fund, with a return of 15%, it would generate 6,06,834 in 10 years, 24,54,981 in 20 years, and 99,31,766 in 30 years. So this is how the lump sum amount would be generated for all these particular funds. Thanks for watching. Please remember, mutual fund investment are subject to market risk, and past success does not guarantee any future performance. Now, if you want me to be your mutual fund distributor, then you can click on the Google Sheet link given in the description and fill your details. And once we have the details, I'll be in touch with you so we can discuss more about your goals and how to achieve it. Okay. If you have still not been on any platform, then I'll suggest you open your free lifetime account on AssetPlus for investment in mutual funds, NPS, and corporate deposits. Don't forget to create your free lifetime account on AssetPlus. Okay. If you like this video, then make sure you hit the like button, and if you are new to our channel, please make sure that you subscribe to our channel. And for getting such amazing videos, please hit the bell button next to the subscribe button. That's all for now. See you in the next video. Till then, take care.